Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York on Wednesday, the 10th day of June 2015, and this is Trending Chartist. We want to focus today on the S&P. We're looking at the E-mini S&P, the NASDAQ, as well as the Dow Jones Industrial Average. The whole concept behind Trending Chartist is to identify markets that are in highly defined trends and look to kind of ride on the shirt tails or capture as much potential profit based upon the fact that these markets are trending. Probably the best example of a trending market right now has to be the equities markets in the United States. This, of course, is a long-term chart that we're currently looking at. It is a weekly chart. We had our dynamic crash back in 2008. Roughly 2009, we hit this bottom at about 700. But since that point, we have had a dramatic rise, and that rise has taken us to new high after new high. Now, the other very notable fact about the rise in the US equities markets is that any kind of a corrective action or retracement in the market has absolutely been there, but it's been rather shallow. We haven't seen anything like the dynamic crash we saw in 2008 as this market came down. You have this one point that occurs really midway through 2010, markets trading roughly at 1200 and drops down to roughly 1000. Again, you have another correction here. You do have significant kind of corrections along the way, but the really underlying characteristics of these corrections have been that they have been shallow at best. So the question that many traders obviously ask themselves is, can this dramatic rise continue? Now, one thing we have to note is that the fundamentals behind the rise in the equities markets, meaning the growth of the US economy and the companies within that, really do not have a ceiling in the same way that some raw commodities do, whether it's corn, wheat, whether it's gold, whether it's oil, that will tend to track within a range or track within a certain price and at some point become extremely oversold. However, at the same time, as this market has been trading higher, we have had these series of tops. This first top right where we are just below, but 2120, we hit the top twice. Then we hit a record high right up here. I think this is about 31 before correcting. Now, according to our Elliott wave, our current Elliott wave count, and this is off of our daily charts, a case can absolutely be made for the fact that as this market moved up, we in essence completed a 5-count wave 3, wave 4, this long wave 5, then some sort of an ABC correction. If that's the case and all things being equal, we will probably go into another impulse phase. An impulse phase, of course, would be our 5 wave count. And if that's the case, what we would be looking at in this scenario right here is the fact that this is the beginning of a wave 1, 2, 3, 4, and 5, of course, not drawn to scale or where I think the market's going. But in other words, we could absolutely move above not only these existing highs here at about 20, but these record all-time highs. The key with the S&P also is the fact that at some point we will get a sizable correction. Historically speaking, we've seen that about every 7 years, and we're just right after that point. We're just at that point right now when you consider the dramatic sell-off that we saw in 2008. We're now at 2015. So we could see something either this year or next year in terms of a dramatic fall. But you can also look at these minor corrections as being fairly deep in terms or relative to where the market was and where it moved to. So my sense with the S&P is I believe that we will continue to see a dramatic rise. I don't think that we have seen the record highs in these markets. At the same time, we need to throw a lot of caution into trading the Standard & Poor's along with the mini NASDAQ, because at some point there is a likelihood that we will see that correction, that release of steam, so to speak, as this market moves from higher ground to record high to new record high. And when you consider the fact that the Dow Jones Industrial trading today closed back again at 18,000, that is a dramatic statement in and of itself. As I said, at any point we can look for corrections within the market, but one thing is clear: this is an extremely dynamic market with incredible opportunity, and that is why we are going to be including it into the fold, into the mix of our new expansion of the gold forecast, as I said, that we have tentatively labeled as the Trend Chartist. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow with another detail on another one of the commodities or markets that we will be tracking and trading here